Hello everyone, how are you all? Today we are going to start our Unit 4, that is International Business of Subject International Business, that is Regional Economic Integration and International Economic Organizations. First, we will understand what is International Economic Organization and Regional Economic Integration. Let's dive into global economic corporations. What will be covered today? What is regional economic integration? Level 2, level of stages and integration, then major regional blocks, benefits and challenges, international economic organizations like WTO, IMF, and World Bank, then roles and function of these organizations, and then what are the key takeaways for conclusions. So we will take the pen and now let's start. Here, what is regional economic integration? So as we can understand via the name suggests regional economic integration is a formal agreement. What is it? It a formal agreement between two or more countries in a geographic region to reduce or eliminate trade barriers. It is basically in Europe, there are many countries came together to reduce and eliminate trade barriers, coordinate economic policies, and pursue common economic goals, moving toward a unified or cooperative economic framework. Like in India, we can understand why India and Nepal's relationship. We have we can understand why they are very low or reduced trade barriers in between India and Nepal. So they are what it's not only about trade. It's about geographical proximities. Countries in the same region cooperate for mutual benefits. Many mutual benefits came into picture. Then formal agreement government by treaties and legally binding protocols. It is not just one person is talking to another. That's all. No, they have make a formal agreements. You have to write in exams. They have specially make agreements between two countries that we are coming into this integration and all. Then barrier reductions, whatever the barriers are, removal of tariffs, quotas, and trade restrictions are removed or reduced or eliminates, and policy coordinations, harmonizing regulations, standards, and economic policies. Many countries have different types of economic policies, regulations, and standards, but to get together to get integrated, they just harmonize their regulation standards so that each and every country can get benefits of it. Now, what is the PPT, next page? Level of economic integration. What are the levels? Spectrum from loose corporations to full unifications. First, professional trade area (PTA). PTA is lower tariff among members versus non-members loose loosened forms. Uh, what does it means? PTA means the who are the members of that integration get uh, lower tariffs in comparison to the other persons who are not the members of this integrations. Example is GSTP. Then another is free trade area FTA. What does it mean? No tariff between members. Each keeps own external tariffs. Here, what does it means? Like one country giving to another without any tariff. This is called FTA. No trade area. No tariff between members, that is free trade area. Like from this the area between them is free. The trade between them can go freely without any tariff. Then another is customs union, FTA plus common external tariff for non-members. FTA is there for the members, and for those who are not members, there are common external tariffs, not fun someone for high tariff and for someone it is low. No, for every other non-member, there is a common external tariff. That is custom unions. Then comes common market. Common market means custom unions plus free movement and labor and capital. Custom union common market is the custom union which is here with custom union plus free movement of labor and capital. The best example is EU single market. EU is European Union single market, where the free trade is there, free trade area is there. For the non-members, the common external tariff is there, and with that thing, free movement of labors and capitals is also there. Like there, the labor and capital can be moved freely. Then another thing comes is economic union. What does it mean? Common market plus harmonized economic and fiscal policies. That is EU, European Union, Eurozone. There is a zone made for the European countries that is known as European zone. There, the market is free, like people can trade freely from other countries, and the economic policies and fiscal policies are also harmonized. It is not like very vast policies between two countries and all, but it is harmonized economic policy. Then again comes is political union, full economic and political integration, highest stage. That is theoretical goal of European Union. Full economic and political integration, like the economics, fully integrated economics and politics is also integrated with this. That is the highest stage. Now the another page is major regional economic blocks. That is ASEAN, Asian Economic Community targets a single market, fastest growing ec- regional economy global globally. It involves it is in common market evolving. So yeah, the Asian stands for Association of Southeast Asian Nations. It was formed in 1967 to promote economic growth, political stability, security, corporations, and cultural development among Southeast Asian countries. There are many countries. Among them, there are total 10 major countries, 10 major members. And should I give the name? Let me give the name. Indonesia, Malaysia, Malaysia, Singapore, Thailand, Philippines, Brunei, Vietnam, Laos, Myanmar, and Cambodia, which headquarter is in Jakarta. Now, USMCA, that stands for United States Mexico Canada Agreement, in which there are three countries, three members are there: United States, Mexico, United States, Mexico, and Canada. Replaced NAFTA in 2020. Repla- 1st July 2020, world largest FTA by GDP, deep rules on labor, IP, and digital trade. Now, another is MERCOSUR, that stands for Southern Common Market, from the Spanish Mar Mercado Común del Sur, was established in 1991, and in which there are four members: Argentina, Brazil, Paraguay, or Uruguay. The objective of this is to free movements of goods, services, and factors of production, reduction of trade barriers and tariffs, and common trade policies. Now, what is RCEP? That stands for Regional Comprehensive Economic Partnership, in which there are 15 members of uh, this integration. The names are Indonesia, Malaysia, Singapore, Thailand, Philippines, Brunei, Vietnam, Laos, Myanmar, Cambodia, plus five partners: China, Japan, Korea, basically South Korea, Australia, and New Zealand. It was signed in 2020 and effective from 2022 for the most of members. That's why here it's 2022. It's written there. Now this is for this. Now the next we will go to next page. Here, benefits and challenges of REI. What is REI? Do you recall? REI stands for Regional Economic Integration. So the benefits are expanded markets, access to larger consumer base, boost trades and economy is of scale. Like there many countries came together, so the markets of the countries people got consumers got expanded. Second is lower prices, elimination of tariff reduces cost for consumers and businesses also. Like the when the tariffs are there, the prices of the goods gets increased, but the because of tariffs are not there, the prices goes down. That's why lower prices, investment attraction, common rules and large member attract market attracts foreign direct investments also, because there are no barriers or less amount of restrictions are there. So the people or the companies from foreign also wants to invest in the country also there. So that's why there are investment attractions also. Political stability, economic interdependence reduces likelihood of conflict, because the their economic stability is that the economic interdependence from one country to other country puts pressure on the government that they don't make anything that makes a conflict between these economies. That's why there is a political stability between them also. Then technology transfer. Open market enables sharing of innovations and best practices. Because of the no tariff and reduced tariffs, and the market is open for all the members, the technology and the innovations from one country to another country got merged and can give a better technology in terms in every sectors and in every field of industries and diverse field. What are the challenges? There are many challenges. Trade diversion. Trade shifts from efficient global suppliers to less efficient regional one, because there were before the trade war diverse, like there are many countries and the market was, there are different markets there, but now the market is one, then the trade is got diversion in itself. Sovereignty loss, country surrender policy autonomy to joint institutions. Countries has to surrender their policy of autonomy to get joint institutions, like because of when 3 to 4 countries are came together, they all have to surrender their policies of autonomy. Like I am higher, I am lower, I am superior than you. Then another person says I am more superior than you. Then it will not be going for a long term. Then the sovereignty loss is there, because countries has to surrender their policies of autonomy to this get into this integrations. Then unequal distributions, benefit may concentrate is in large stronger economies. Like when there are many big countries are there and the small countries is also there, then the benefit for the big countries are basically high, because the small country people go went to the big countries to get some amount, uh, to get the goods and services. Then the small countries got, the economy of small countries cannot go higher, because they are spending their money into bigger countries. Then so that's why the larger and stronger economies got more and more larger and stronger. Then adjustment cost, industries may collapse due to competition, possible job losses possible. Okay, because industries may collapse due to competitions, because many countries wants to start their own industries also in each country. That's right. Coordination complexities, aligning diverse economies and political system is difficult. What was the point here as an benefit can become challenge for the can become challenge, as not each and every country's politics want to get integrated or want to surrender its policies. Na? That's why it is complexities, coordination complexities. Now, this page is done. The next page is International Economic Organization. What does it means? The international economic organizations are multilateral institutions stabilized by treaties among nations states to manage, coordinate, and govern global economic relations, covering trade, finance, development, and labor and monetary stability at the international level. The key characteristics. Basically, what does it means? The International Economic Organizations refers. World Trade Organization, International Monetary Fund, and world nations. Like these are the international economic organizations where they don't only covers on trade, but they along with trade they covers finance, development, labor, and monetary stability at international level. Like they don't concentrate on some particular countries, but they have to deal with the international level countries. Now, universal near universal membership open to all country governed by member consciousness consensus or voting weight. The person who was governed there are get there by voting of weights. Many countries are there, open for all the countries, and each country's representatives are there, nearly each. Rule-based governance operate under charter, article, or conventions that bind members. There is not just a single agreement, but there are articles, conventions that might bind members for the rules based on governance. Governance based on rules. Then institutional mandate. Each IEO, International Economic Organizations, has a specific economic domain: trade, finance, and labor. What does trade? WTO, World Trade Organization, finance, IMF, International Monetary Fund, labor is there. Another thing is like world nation, etc. Then technical assistance provide expertise, data research, and capacity building to member nations. Then another page, WTO. What does WTO means? WTO means World Trade Organization, WTO. Now, it was established in 1995, Geneva, Switzerland. There were 164 member states, 98% of the whole trade. Core mission. What is its core mission? Regulate and liberalize international trade, provide forum for trade negotiation, dispute. It regulates the international trade and liberalize international trade between different countries. Among whenever there is a dispute between two countries, both of the countries go to WTO for settlement. Legally binding disputes resolutions mechanism, courts of world trade. Wherever there is a conflict in trade in worldwide, it is a court. Understand what is it? It is a court for the world trade. Then another is key agreements, GATT, goods, GATS, service, and TRIPS, intellectual properties. There are different agreements which known as GATS, GATT. GATT means General Agreement on Tariff and Trade. It is basically for the goods, and it was established in 1947 to promote international trade by reducing tariffs. What is GATS? GATS refers to General Agreement on Trade in Service. It was established, came in force with 1995. Just as GATT deals with trade, GATS deals with services. Example, banking, insurance, telecommunication, tourism, education, transportation, information technology, and others. Now, what is TRIPS? TRIPS full form is trade related aspects of intellectual property rights. It is it covers the intellectual properties. Okay, there are three categories. These are three categories, and these are the key agreement between them. The another is trade policy review. Monitor and review trade policies of all member governments. It reviews the trade policies of all the members governments and monitor and review what are they serving in the plates. Now another is special treatment. Provide developing nations professional treatment and technical assistance. The nations which are still in developing phase, the WTO provides treatment and technical assistance to them so that they can is fast soon got title of developed nations. Now another is the Bretton Woods twins. Created at 1944, Bretton Woods Conference to rebuild the post World War II global economy. Twins are IMF and World Bank. Be- uh, Back there, that was WTO, World Trade Organization. Now it is International Monetary Fund. What does it has? There are 190 member countries in IMF, maintain international monetary stability, provides emergency loan bailout packages whenever there is a need of loan for the countries. Each of the country go to IMF for the monetary fund. Like when India was in deficit, India went to IMF for money. Instead, in collateral, it gives the gold in 1991. Similarly, whenever there is a need of funds in Pakistan or each of any of the country, they just went to IMF for the loan. Now, monetary exchange rates and balance of payment, conduct economic surveillance, Article 4 review. Now, issue special drawing rights as reserve assets. So basically, the IMF role of IMF is to give assistance of monetary base to each of its countries and its countries which are the member of IMF and provide different types of services to them. Now the another is World Bank. Groups of five institutions. 189 members countries are there. Finances long-term development projects, focus poverty reduction and economic growth. IBRD, middle income, and IDA, poorest nation. There are two types of there are two types of World Bank's program are there. In that is International Bank for Reconstruction and Development, which helps middle class to for reconstruction and development. The major um, what to say? The major objective is to reduce poverty of IBRD, reduce poverty for promote economic development, finance infrastructure projects, support education, healthcare, and environmental projects. Now, another is IDA. IDA is for the poorest nation. IDA is stands for International Development Association. It was formed in 1960s. It provides low interest rate loans, interest-free loans, and grant to the world's poorest country to support development and development and reduce poverty. The key areas are education, healthcare, clean water and sanitation, infrastructure, agriculture, and economic development. So now, what is this? The fund infrastructure, health, education. It World Bank provides this. World Bank main objective is these are the main objective for the World Bank. Now, world's largest multilateral development bank is World Bank. Now, other key international economic bodies OECD, Organization for Economic Cooperation and Development, Policy Forum for 38 Advanced Countries, Economics sets global tax standards, BEPS, data and research. ILO, International Labour Organization, sets global labor standards, promotes world workers' rights, employment, and social protections. Another is Asian Development Bank, regional multilateral bank funding infrastructure and poverty reduction across Asia Pacific. Whenever there is any problem comes with any employee of the company, the case if it's so high, matlab, it has potential, then it can go to this International Labour Organization. They are the main court for those who for the workers or the employees. And wherever there is a there are conflicts like worker from one country goes to another and got exploited, then the organization came into picture is International Labour Organization, because the labor is going from here to there to do work, and there they got exploited. So the ILO came into picture. Another is IFDB, International African Development Bank, finances development of projects in Africa, supports AU's Agenda 2063 goals. Okay, so this page is over. Now we go to next page. AU, what does AU agenda means? AU agenda is African Union Agenda. 2063 for long-term development blueprint of African Union. What is Agenda 2063? It was adopted in 2013, and the main goals are inclusive economic growth, sustainable development, good governance and democracy, peace and security, regional integration, and most important, improve education, health, and living standards. Now, so our next point is REI versus International Economic Organization. What are the differences between these two? Why are they and how are they work together? So the scope for them is geographic. For the REI, it is geographic, limited to a region, whereas IEO is global, open to all countries. Goal. What are the goals for REI? It's deepen economic ties among neighbors, whereas for the IEO, it's govern and stabilize global economy. Membership. Countries in same region can came in REI. It is not like India and Japan can came together to form an REI. It cannot happen. It is not possible. But India and Nepal or China can came together because they are all in a single region, or India or Pakistan. But it won't gonna happen. And now for the IEO, any qualifying nation state integration depend depth high integration depth. For REI, high shared traffic, tariff, market, and currency. For IEO, lower rules and settings are just rule settings are common, not unifications. Example for the REI is EU, European Union, IS is ISEA, and Asian, East Asian, and all MERCOSUR, and USMCA, United States, Mexico, and Canada. For IEO, they are World Trade Organization, International Monetary Fund, World Bank, OCED, OECD. Now, what are the binding powers for REI? REI, the binding power is legal binding among members. There is a legal binding, not just some theory or that, but there is a legal binding. But IEO is binding through treaties and conditionality. Output common trade area, single market. But where in IEO, agreement, loans, and reports disputes. That's all. For this, we will go to next page. So now we will going to real world impact key data points. There are 75% intra-EU trade shares. EU member states trade more with each other than the rest of the world. These for them, if there is a 100 rupees transaction between with these countries, then 75 rupees transaction with uh, they will do with within that European Union, and other 25 will be go to outside of the world, outside for the union. Now the total amount is $1.2 trillion. That is for IMF total resource available to member nations facing balance of payment crisis. 164 world trade members are there, and 42% world GDP from G20. That was happened in India. Case studies of European Union, the world's most successful and complex experiment in regional economic integration. It was started in 1951. Coal and Steel Community ESC, ECSC founded six nations. Then it will grow to in 1957. Treaty of Rome is what happened. European Economic Community EEC created. Then within 11 years, the custom union complete, no internal tariff. Then after 25 years, single market launch, free movement of goods, service and capital and people. There are no multiple markets, single market launch. In 1999, Europe Euro introduced as common currency between these countries. Then 2007, Lisbon Treaty enhanced EU governance and legal personalities. 2016, Brexit referendum, UK votes to leave, departed 2020. Before this Brexit, UK was the member of EU. In 2024, 27 member states, world largest single market. This is the best case study for the European Union as it gives the real example of regional economic integration, how the integration was happen. Next is what are the key takeaways? Trade-off exits every integration level, sacrifice some national autonomy. Brexit proves deep integration can be reversed at a high cost. Brexit is Britain exit. Britain got exit at very far after time, very a long time after long with a very high cost. Then economic gains are real, lower cost, larger market, FDI, foreign direct investment inflows, and price reduction benefits consumer and business simultaneously. Then REI, regional economic integration, and IECO, international economic organizations are complementary. Regional blocks operates within global rules. AFCFTA, RCEP, EU all exist alongside and interfere with WTO disciplines. The future is evolving. Digital trade, green economic transactions, and geopolitical fragmentations are reshaping the architecture of global corporations. Future is evolving, right? Now, no nations can thrive in isolations. The point, this means no, n- not a single nation can sustain for long in isolations. It has to go out and make friends and people and make communities. Regional economic integration and international economic organizations are the twin pillars of today's global economy. They are tools nations use to balance the pursuit of national prosperity with the reality of global interdependence. See, in the whole chap in the whole video, we understand that not a single country can on its own. It every country has a global dependence on each other. Whether we talk about any phones are there, each of us, many of our, each of our phone got made in either China, US, or Korea, or even India also. So we are, but the companies are from different parts of the world. Samsung is from Japan and all, and they are different parts, but they all came together. Phones are being made in other country, got export in other country, sell in other country. So the best example is our phone. So there is a global interdependence on each and each other. Each comes with trade-off and each shapes the lives of billions. So with this, thank you for the um, your patience and listening. After this, we will come with another video of this chapter, this subject, that is Unit 5. Till then, any questions are there, you can give in the comment. I will try to resolve in as soon as possible, and any feedback you can give in the comments. Thank you.